lots gone on with real estate, in part because of what's gone on with rates. Start with the beginning question. There's been sort of a repricing of real estate because of those higher rates. Where are we in that process?
Well, there are really two parallel repricings that are going on right now. One which has already happened and potentially overcorrected a little bit, which are the public real estate markets, the REIT market, and then the private real estate markets, which have taken much more time, and where we might be, call it 60 to 70% through, and that is an average because the different sectors are behaving very differently. The fundamentals are very different among the different sectors, and the impact that rates have had on the valuations and the private valuation process in general is a little bit different, and the experiences have been different for the different sectors.
On the private side, are sellers having a tough time coming to terms with the new prices?
I think sellers are having a very tough time coming to term with the new prices, and the gap between where buyers and sellers think things should trade, and then overlay that with where the lenders may or may not be willing to lend. It's the transactions market is so muted right now. I can't actually remember a time that it's been this muted before, and it's only gotten worse since rates have spiked, really just recently.
Well, if you have to refinance in this world, it's a very different world from just 2 or 3 years ago. At what point do a lot of the sellers have to refinance and it really has to change what's going on?
Well, that will happen over time, and there are, maturities that are coming up. There are maturities that have already occurred, where there's been a bit of a kicking the can down the road, particularly in the office sector. So if you think about it, an office loan matures, and so what normally happens? You could refinance that office asset, generally at the same or a higher loan balance, or you could sell the asset. Neither one of those things is really possible right now. The option that's available to people right now is to potentially extend the loan, and often that requires some sort of an equity pay down, which generally, particularly in the office space, is not that appealing to borrowers because in some cases they feel like they're throwing good money after bad.
So that's office space. As you suggested, there are a lot of different parts that come under real estate, and there's a big variety. Where are there some opportunities out there right now that you're interested in, particularly within the broader real estate market? I'm
really glad you mentioned that because it is definitely a common misconception that the office sector dominates the investable universe in real estate, and that's not the case. It's never been the case that it's dominated. It certainly has been higher than it is right now, but in the private markets, if allocations to office were in the high 40% range, they're now about 20%. And in the public markets, the percentage of the REIT index that is pure office is hovering somewhere around 5%. So it is far less of a sort of 800-pound gorilla than it was at one point. But I do think that gets a little bit overblown. In terms of where we see opportunity right now, the operative term is necessity. Things like housing, things like grocery-anchored retail, things like infill logistics. So the basic necessities of life, we call them sort of necessity retail, necessity properties. It's food, shelter, and your Amazon deliveries, right? The things that nobody can live without.
Talk about shelter just for a moment, because we are hearing about the possibility that it's difficult or even impossible to get insurance for some housing now. Certainly we have issues in California, we've had them in Florida. How is that affecting the marketplace?
It's impacting all kinds of property. It's not just single-family homes, which is really where the headlines tend to be, but in certain markets in California, in Florida, so many insurers have pulled out of those markets because of all of the losses that they've had with climate issues over the past couple years, to the point that you're really talking about, like, order of magnitude, about 30% increases year over year for the past couple years in insurance coverage. So that's obviously very difficult for individual homeowners, but it's also difficult for investors.
Those of us who are based in the United States tend to be U.S.-centric in our thinking, and particularly when it comes to real estate.
Yes.
But there's real estate around the world. As you look around the world, do you see markets that are particular opportunities right now?
There's certainly markets where the dynamic is different, and that can create opportunity. And in particular, where I would say there's great opportunity is in Mexico in the industrial space, and particularly along the border. And you have a lot of multinational companies that are located there looking for logistics and distribution type space, and many of those leases are dollar denominated. So you have kind of the premium over a very similar, you can have an Amazon building south of the border or an Amazon building north of the border, and there's a pretty significant spread in those yields. So that I find to be very interesting, and we find that to be a very compelling investment right now. If I go to Asia, the markets are functioning much more normally in Asia than they are in the US and or Europe. And while transactions activity is definitely muted there, it's not in the same scale that it is in terms of the decrease for Europe and Asia. And Europe really, the repricing there, I think, is a little bit further along than it is in the US. But the interest rates, obviously are really impacting the European market. The European banks are pretty much out of the market from a lending perspective, and that has, I think, imposed a little bit even more stress on that market. And we have to consider the fact that while the rising interest rates, we've been at about a little more than a year here in the U.S. where that's had a huge impact, but Europe was, really immediately impacted by the Ukraine war. And so it's been just a longer period of distress in Europe.
I've heard it said, Cathy, that every business at this point is a tech business. I'm not sure if that's right, but certainly tech is changing every business. How is it changing your business?
It's changing our business in many, many ways. And you might have seen that we recently launched an innovation lab. And that is multi-pronged in terms of leveraging AI and data, in particular our proprietary data from our platform, in order to have better investment outcomes. But another really big and actually quite important aspect of the research and development and investment that we intend to do in technology through our lab with our university partners and with other technology companies is to address issues around climate and ESG. And it's very interesting in the real estate space because there really isn't that kind of controversy around ESG that you might find in other sectors. Having lower energy costs and using less water, that's just more income for you as an investor in real estate, and that's just going to improve your value. So we really have a great focus on that. And if you think about, how many companies have made net zero pledges by 2050, the only way to get there is really to have technology, to use technology, most of which does not exist right now. And some of the things that are really interesting that are being explored right now are things like green concrete and sensors that can sense all kinds of things. They could sense if someone maybe is having a heart attack. They could sense a water leak before a lot of damage is done, which, by the way, we were just talking about insurance. A lot of these technologies will help to mitigate insurance costs because it'll mitigate losses. So there's so many really interesting things going on in technology right now around the globe, in real estate and really just around the built environment. So we're very excited about our new initiative.